Dear friends, welcome to weekly view on markets. Markets saw a panic sell-off during this week after SEBI chief stated about a possible manipulation in SME stocks and some of the small cap stocks. Also, she stated that mid and small cap indices are overheated. Their valuations is very high. So this resulted in a panic reaction in the market. Small cap index lost more than 5%, and mid cap index lost around 4.5%. Bank Nifty also fell more than 2%. All sectors except information technology were in the red. Interesting thing to note in this week is that FIIs and DIIs they have bought at lower levels, and bloodbath in the market was mainly due to the panic selling by retail investors. Data indicates that panic selling was by retail investors. SEBI chief should have been more responsible in making his statement. As a regulator, his job is to regulate the market and not to create panic in the market. He should have made a responsible statement instead of creating panic in the market. Let us look at the indices level during this week. Nifty closed at 22,023 with a cut of 470 points, that is 2.09% loss for the week. Bank Nifty closed at 46,594, that is a loss of 1,241 points, that is a loss of 2.60%. Whatever Bank Nifty had gained during previous week, that entire gain has been given up in this week. Mid cap index closed with a loss of 4.66%. It lost about 2,280 points, closed at 46,685. Small cap index closed at 14,846, lost about 862 points. There is a loss of 5.49%. India VIX is more or less remaining steady at around that level. Let us look at performance of various sectors. Almost all the sectors lost hugely during the week. Information technology is the only one sector which gained about 1.8%. Realty sector lost about 9.92%, almost 10%. PSE index lost about 9.13%. Media lost about 8.34%. Metal sector lost about 6.79%. PSU banks, energy, oil and gas, commodities, auto, infrastructure all lost about 4 to 5%. Remaining sector like manufacturing, healthcare, pharma all lost about 2 to 4%. And other sectors were ended with minor losses. Overall, market dip was very, very negative. There were more stocks losing than the gaining stocks. There was panic all around. This panic was further escalated as government reduced the petrol prices by 2 rupees. That resulted in a heavy cut in oil and gas stocks on Friday. Major oil marketing companies like IOC, BPC, HPC all saw about 5 to 7% loss on Friday. Now let us look at technical charts. This is the chart of Nifty index. Here we can see the panic selling has created a big red candle after SEBI chief statement. It has a large drastic sentimental impact on the market. Huge selling was seen. After that, market has started stabilizing it at the lower levels. So some more pain may be left in the market. After that, I am sure the market should start recovering from these levels. So Any dip like this due to some extraneous factor is a opportunity to pick up fundamentally good stocks. This is a chart of Nifty mid cap index. We can see the kind of panic that has been created. There is a sharp sell off. After that, mid cap index is trying to stabilize. We will have to wait and watch for one more week. Then we can decide whether to buy into mid cap stocks or not. This is a chart of Nifty small cap index. Here also we can see the kind of panic that is happening. So already many as analysts were stating that Nifty small cap index has run ahead of time and it is overvalued. And from around 16,500 level, it has started dropping. And the downward movement has escalated after the SEBI chief's statement. It created a further panic in the market. The regulator should be restrained in making such statements. He is market regulator. His job is to regulate the market and not to come out and make panic creating statements in the public. This is a chart of Bank Nifty index. Bank Nifty index crossed the major resistance level and it went up to 48,000. And from there, we have seen the selling pressure. Now, again, it has come down below this major resistance level. Now, we'll have to wait and watch for few more days. I feel that the chart is making a higher tops and higher bottoms, and somewhere from around 46,300 level, it should take support, and from here it should go up to maintain the rhythm of higher tops, higher bottoms. If it breaks below this 46,000 level, then there will create further selling pressure on Bank Nifty. Now let us look at some of the fundamental factors of the market. CPI inflation index for the month of February has come at 5.09. It was 5.10 in the month of January. So it looks that CPI inflation is steady and IIP growth figures for the month has come at 3.8% growth in the core sectors. So these figures are slightly lower comparing to the previous month. RBI forex reserves had touched the all-time high of 629 billion. This is the highest level in last 2 years. So RBI is maintaining a good dollar reserves. Forex rate is at 82.89 per dollar and dollar index is steady at around 103.45. Brent crude price is at 81.51 per barrel. Gold price is at 66,100 for 10 gram 24 carat. Gold price has seen rise from around 62,500 level to 66,100 level in last 1 month due to good demand for gold and jewelry. FIs have sold 818 crore for the entire week, but on certain days they have bought as well. DIs have put in 14,146 crore. This is one of the highest amount that is invested in a week. That means DIs are adopting a strategy of buy on dips. Looking at the statistics and the charts, I feel all that this is a buy on dip market. Investors have to use the correction to buy good quality stocks. There is selling in the mid cap and small cap stocks. The money is moving into the large cap stocks, and the FIs also generally tend to buy large cap stocks. So money is flowing from small and mid cap into the large cap stocks. Investors also should keep the risk in the market coming from the geopolitical developments, developments in the Red Sea or the cargo ship movements, and developments on Ukraine and Russia conflict. Similarly, Israel-Hamas conflict. All these things will have an impact. So investors needs to be aware of these geopolitical risks, and accordingly they have to make their investment strategies. So mutual fund investors should continue their SIPs. If the market falls, they are able to invest at lower levels and get more number of units for that month. So the SIP investor should not panic and stop his SIPs. The corrections in the markets are normal phenomena. So investors should not get panic about it. Overall, Indian economy is in good shape with strong macroeconomic fundamentals, and corporate earnings are improving. That should benefit the long-term investors as well as mutual fund investors. This is all for this week. If you like my video, please share with your friends, give your comments. We will meet again next week. Thank you.